Welcome back. Great to have you with us on SABC News. Now, before the break, we were talking about the fact that we could be in an interest rate cutting cycle. We could see interest rates coming down, but that's all changed, and the Reserve Bank is now talking about interest rate hikes possibly in future. No change today, but looking ahead, we're now looking at hikes. And back with me, Busisiwe Radebe from Nedbank, Ian Cruikshank's independent. Ian, one of the risks is the downgrade. What happens to the rand? If the rand goes down, that makes a whole lot of imports more expensive. Yes. And we were saying he doesn't really know.
Well, he doesn't know for sure. All he knows is that it's a deteriorating situation. And in that sort of environment, it's almost inevitable that we will see further rate increases. I don't think that we can avoid it. I think that, if, talking about the downgrade, it's not a matter of when. It's not a matter of if, it's when. And with that in mind, one must expect further deterioration of the rand, further increases in our import prices, input prices, input costs into all sorts of sectors. And I think that it's also a factor that he mentioned, the world move towards a rising interest rate cycle. We have to keep pace with that in order to maintain the foreign capital inflows that we've been having by the purchase of our bonds, our government bonds, by foreigners. And if we let that gap close, we may find that it's no longer seen as so attractive, and then we'll get an outflow. So we are forced by global circumstances as well as domestic factors to keep on a rate hiking cycle.
Yeah, because let's make it clear, higher interest rates help protect the value of the rand, basically.
Exactly. Yes, that's exactly right. And if you just look at what it means in rand terms, as foreigners have been selling corporate SA, they've been selling equities on the JSE, around 70 billion rands worth already this year. And they've been parking that money in our RSA bonds. But now all of a sudden, they say, yes, we can get a good return. That return on that investment is satisfactory. They're starting to worry about the return of that capital. And if that gathers momentum, then we have no choice. We've got to maintain that gap.
But Sisiwe, last question on this. I guess it has been confusing because predictions now, another $10 billion, $20 billion. I've seen incredible projections of what could happen if the local currency rating is downgraded and people move out of South African bonds. But I think things have been strange because we were downgraded before, but then there were fortuitous global circumstances protecting the rand. So I guess that's why nobody really knows what's going to happen now.
Nobody knows, but also the different indices sort of have different rules as to when do I sell, Some of them could say, if 2 of the 3 credit rating agencies have sort of you on junk, then you actually need to have that forced selling. Some of them say if all 3 have it. But also tomorrow we've got 2 credit rating agencies giving us rating updates. The one sort of the market thinks will probably downgrade us to junk, our local currency debt. And then the other one, market thinks maybe they'll wait till after the ANC's elective conference before doing that. So that's why there is this flux and nobody actually knows what is going to happen.
All right, we're running out of time. Very quickly, final words from both of you. I was interested that he mentioned Black Friday. It's gotten that big that the Reserve Bank is talking about it. And is it a pity that he had to again defend the independence of the Reserve Bank, which has always been sacrosanct in South Africa? Let's start with you, Ian.
Absolutely. And I think that's been one of the pressure points on the rand exchange rate itself. It's internationally. The independence of the central bank has got to be sacrosanct, as you said, and if there's any threat to that, I think that just encourages the downgrading to a greater, faster extent. So I'm glad that he was so definite about it, that he came out so strongly when it was mentioned that there may be some shuffling of personnel in the Reserve Bank. One could almost see him bristling. Good, he must maintain that.
Final word from you.
I mean, if you look at the figures here, we have inflation, the inflation projection telling us that inflation is going to remain under 6% for sort of the next 3 years. We know that growth has actually been, the Reserve Bank's growth forecasts have been downgraded. In an environment like that, you usually would expect them to cut rates. But the big thing here has been the uncertainty. So if there wasn't this uncertainty that we had all this time, we'd actually have that chance of rates being cut. And I think people shouldn't forget that.
Yeah, so we would be getting Christmas gifts right now. Indebted consumers would possibly be seeing rates going down. But like both the guests have attested to, it's all this uncertainty that is holding the Reserve Bank back. Thank you very much, Busisiwe Khadebe from Nedbank, Ian Cruikshank's independent analyst. And that's where we leave our special broadcast. I'll be back with you if you can join us in Prime Business at 6:30. See you then.